Late day sprinkle, it'll be mild, 68 to 74. Lots of clouds, mild overnight, lows about 60. And for tomorrow, lots of clouds, slight chance of a shower, it'll be about 71. On Friday, a mixture of sun clouds, it'll be warm and breezy. On the Money Matters Radio Network, I'm Mark Rosenthal.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
You're tuned in to Money Matters Boston, 1120 a.m. WBNW. This is WBNW, 1120 a.m., the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month. It is titled Trusts in Your Financial Plan. Mike, when you look at the big reasons that someone might want to undertake trust planning and how that dovetails with financial planning, what are the big items that come up for a lot of people?
Yeah, for most common reasons, there's four that I think about. One, in certain states and across the country, there's an estate tax, and so there's trusts that can help you mitigate the cost of that estate tax for future generations. There's trusts that can allow you to do sorts of bloodline planning. Maybe you have minor children and you're worried about passing away young. You can have trusts that are set up to deal with that situation. You have trusts that can avoid probate. And then the fourth one is sometimes a trust that might help deal with creditor protection. Sometimes a nursing home would be one of those creditors.
When we talk about financial planning, generally we're talking about things such as budgeting or investment allocations and things like that, and making that work to get you the money when you want it. How do you view trusts as fitting into that as well?
Well, it's one of those boxes that you need to check, and it goes along with other estate planning documents like a will, like a healthcare proxy. But important for most people, especially those in New England, to at least have the conversation around trusts and whether or not it fits into their strategy.
The guide, again, is titled Trusts in Your Financial Plan, and it is available for you to request at no cost. All you have to do is call 800-393-4001. The title, again, is Trusts in Your Financial Plan, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Kicking things off today here on a Wednesday, Chuck, Paul, and Tucker with you. And top story here today is from the classic newspaper, the New York Times. The headline is the stock market's Boomerang month has put investors in a bind. Subheadline is, although they long for more clarity about tariffs, investors are nervous about sitting on the sidelines as stocks climb, which I think makes total sense. I mean, again, we were at a point, a few weeks ago where, hey, if the tariff situation didn't change, we were heading towards some pretty ugly stuff with, some pretty solid certainty. The question I think that's out there now, and the piece that I don't think anyone has any great answers on is, look, how much damage was caused to either the U.S. or global economy over the last 30, 40 days? When is that damage going to show up? And does the dropping of the China tariff from 145 down to 30 provide enough of a release in, kind of animal spirits and excitement to offset whatever damage might have been done and keep the economy on a track that keeps it out of recession? I think these are the questions that are being asked. And quite honestly, 3 days after the China tariff drop announcement, I don't know that you have anyone who can say, anything with 100% certainty about this, because we were just starting to get to the point where you'd likely see some of the economic data coming in that would have shown the damage from tariffs. And now you have to weigh that against all these other things. So I think if you're trying to look at this economy and market and be like, hey, where is it going? And you're sitting there going, I don't really know. I think that's a pretty reasonable place to be.
Yeah, what we've seen is a 17% gain from the lows that we hit. I believe it was around April 8th. That was the low period for this year. The S&P 500 is 4% off its February highs, but year to date, if you look at it, we're slightly in the positive. So it has been a roller coaster ride. And like you mentioned, there is no clear path as to what the impacts of the tariffs are going to look like on the U.S. economy. The things that we would track most closely would be the labor market, which we'll talk about a little bit. Inflationary pressure, we got a reading on that yesterday, which didn't show any conclusive evidence of significant tariff impact, increasing inflation for the month of April. So it does come back to very much a wait and see approach, and so much so that I don't even think it's a wait and see for next month. It may be several months till later in the summer that we have a clear understanding of what things are going to look like. And there are some of these pieces that we'll cover in the stack today that are making these suppositions that because of the tariffs that have been in place, there's going to be an inflationary impact. It's hard to say if that is going to be the case.
Yeah, so I think, look, here's the thing that I look at now with the economic data. After the April 2nd announcements on tariffs, remember, we hadn't really gotten any of the March economic data yet. We said, look, you need to throw out all of the March data because it doesn't really matter. It's a different world now than it was before. We're sitting here now after the announcement from this Monday, May 12th, and I think you can kind of make a case, not that it doesn't matter, like the data from April and even May, but you can certainly like downgrade it and like say it's not really as important as what's going to come later this year now, just because the climate has clearly changed again and we don't exactly know how it has. So I think, you're at a point where you're going to have to pay attention to the data, and certainly if it shows like any meaningful, broad-based shift in trend in either direction, okay, you sit there and you say this means something. As an example, if we see the next 2 months of retail data after tariffs go, sky high crazy because everyone's saying, oh, like, great, like, we don't have to worry about this, like, we were gonna, front load for, tariffs, but now we're gonna buy even more stuff because we feel better about our situation. Okay, you could probably say something, positive about that, especially if hiring intentions pick back up and all those kinds of things. You could be like, yeah, like, Americans feel good about where the economy's going now. On the other hand, if we start to see jobless claims, ratcheting up and you see retail sales puking left and right because, hey, people did actually preload, try to front run tariffs, and now they just don't want to buy as much stuff because they already did, then you could say, okay, like there's some weakness here that we, really need to pay attention to, and there's something there. But it's also one where, like, there's a reasonable case to be made that those are still just like short-term corrections from behavior that had already happened in the first quarter. And hey, maybe you're better off just like waiting to see what the July data shows in August, and you go with that as a sense of, where the economy is starting to settle. This, by the way, is also working with the assumption that, remember, we're over 30 days into the 90-day pause on all reciprocal tariffs aside from China.
Right.
So you get this ticking clock that's going to come due in July. We don't know exactly what's going to happen there. Maybe every country stays at a 10% tariff rate. Maybe some ratchet up. Maybe they all go away. I don't really know what we are going to get. And so there is room for the economic situation to further evolve as well as it relates to, what you may see over the next couple months. So I think by and large, this is an economy that clearly had some significant slowdown concerns and some that are probably going to manifest over the next few months, just because I don't think you can go through 30 days of what we went through on tariffs and say, hey, everything's going to go immediately back to how it was before. But we just don't know what the balance is between what's that slowdown look like and how much excitement is there now out there. I don't really know, because talking to different people in different industries, you get all kinds of different answers at the moment.
The severity is something that you cannot gauge. How basically, in effect, we had an embargo on China for that 30 or 40-day period. What type of impact does that have on the supply chain, the availability of purchasing certain goods in the United States, or how will that translate to potential price increases? All of that is up for debate, and we need to continue to monitor.
So, yeah, it gets you to this piece with, hey, what do investors do as a result of this? And I think ultimately it comes back to the stuff that we've talked about kind of all along over the last couple of months, which is, look, you don't panic and sell everything at the lows because you never know exactly what's going to come next. If you sold out on April 9th and you said, pull it, like we're calling it, we got to get out of everything, you probably feel pretty dumb right now.
Certainly.
there's a non-zero chance that if you say, okay, everything's recovered, it's time to pile back in, you might feel pretty dumb 2-3 months from now if we end up getting, a bunch of bad economic data that the U.S. economy can't overcome. I'm not saying that will or won't happen. I'm just saying you never know, and that's why making these binary decisions, sell it all, buy it all, just based on what the market is doing, those are not good decisions. Emotional investing, whether it's out of fear, greed, or any other emotion that you may have, hunger, don't invest when you're hungry. Like, if you feel yourself making emotional investment decisions, you're doing it wrong either way. And I think that's what I come back to on this. So if you're looking at this right now and you're like, man, the S&P has rallied 1,000 points off its bottom. Did I miss the boat? Do I need to pile in right now? I don't think those are healthy questions to be asking yourself.
No.
I think if you're someone that's that swayed by price movements in the stock market, you need to really think about, either A, finding a way just to detach yourself from it, whether it's, hey, again, there's different ways you can do this. Like, hey, I'm giving my investment account passwords to my spouse. They're going to handle it so that I can't, do anything. So that, if I get emotional, I can't go and just trade it. Or do I want to hire someone to manage this for me because I can't do it? These are conversations that you need to have because there is no world in which investing emotionally is going to produce good outcomes for you. It's just not. And so when I read this piece about, you've had this, Boomerang month, did you think this market was just going to go all one way, either up or down this year? Because if you did, you've kind of been off sides there.
You could have said if the tariffs had stayed in place that you could have made the argument that it would continue to trend that way, but the policy has changed rapidly, so it's ever evolving.
Let's take a quick break. When we come back, we'll talk a little bit about what we are seeing in the labor market right now, right after this.
Market volatility is at its highest point since the pandemic. Keep it here for the most comprehensive coverage of the global trade war. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, If you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by Margaritaville Resort Cape Cod in Hyannis. Looking for a great vacation spot? Well, look no further than Margaritaville Resort Cape Cod. Located just off Route 6, Margaritaville Resort Cape Cod is perfect for a weekend getaway or fun-filled family vacation. You'll enjoy first-class accommodations and dining in our incredible Fins Up water park and, of course, the gorgeous pageantry of the Cape. Visit MargaritavilleResortsCapeCod.com for reservations and more information.
So we got a couple of labor market pieces here, one in the Wall Street Journal, one in Barron's. The one in Barron's is the one that we'll start off with. It's titled, Inflation is Creeping into the Labor Market, Tariffs Are a Worry. And what it talks about is a statistic called the Employment Cost Index. And basically, when we look at that, it's calculated by the Bureau of Labor Statistics, and what it says, I'll quote here, momentum could pick up in this index again, according to a lesser-known data point updated this month, the Employment Cost Index, which fell to 3.6% in the first quarter of 2025. It tracks the cost of compensating employees, blah, 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 and basically says, look, if this stays at this level, it has the potential to be problematic for employers who may want to reduce headcounts. Now, I guess what I struggle with on this, Paul, is the Employment Cost Index has been coming down since Q4 of 2022, and despite the ECI coming down over that time, we've seen the labor market slowing, and there has not been a correlation where a higher ECI results in more layoffs here. And, they try to make the point, hey, like a low employment cost index would, potentially boost hiring, I think is what they're trying to say. But the employment cost index was basically hovering around like 1.8 to 2 during the early 2010s. And that was a freaking horrible labor market. So I kind of wonder if this is mixing up supply and demand and kind of backwards. I didn't really get a good sense for what this piece was arguing in a convincing way.
Yeah, basically, it's helpful maybe just to give a little more context to the employment cost index because it's something that's not something that we regularly discuss. It's basically measuring the growth of labor costs in the United States, so including wages and salaries, and it has a pretty tight correlation to inflation. And if we want to look at the periods of time that we've experienced over the last 5 years, which we've seen sort of every iteration of it, where 2019 sort of pre-pandemic levels, you had no concerns about inflation at all. Obviously, in 2022, that became a significant concern. If we look at this ECI measure that they're quoting here, Employment Cost Index, that percentage post-COVID was in and around 2.8%, extremely low. And what we saw post-COVID was a tremendous demand for hiring because there was a ton of money in the system, significant amount of demand, supply chain snarl-ups and things like that. And you saw a tremendous amount of mobility in the labor market. Fast forward to 2022 through 2024, we were in the midst of battling significant inflation that we hadn't seen for many years. This employment cost index measure moved to 5%. As you mentioned, Chuck, it now sits at 3.6%. The argument that I believe is trying to be made in the piece here is that tariffs are going to cause, and I'm not saying I agree with this, I'm just saying this is the outline of the argument. Yeah. Tariffs are going to cause inflation. That's going to increase the cost of living for U.S. employees. As a result of that, employers will need to allocate more capital to cover labor costs because of that cycle that we typically experience when there's inflationary pressure. Our stuff costs more, Chuck. We turn to our employer and say, gee, we need a little bit more money because things are costing more. And this harkens back to what I was saying earlier in the show, this idea that this is making the assumption, Chuck, that we are going to see a significant, or we're going to see an uptick in inflation, right? And I just can't jump to that conclusion just yet because maybe we'll see an uptick in inflation, but maybe it's quick and it subsides.
Yeah, I just don't know how... I don't know how you can look at this as any kind of like leading indicator of where the labor market is going to go. It just seems to have the causation backwards.
Because if there was perfect correlation, this 3.6 percentage figure off of the 5% figure that we saw in 2022 to 2024 would indicate perhaps robust hiring.
Right, more robust hiring.
And it's not indicating that. So there's not perfect correlation with this argument here.
So you do have then, this is I think a meteor piece, even though it's like 8 sentences long from the Wall Street Journal. But hey, listen, like you can have, there's certain cuts of meat that are small but pack a punch. And that's what this piece in the Wall Street Journal does relative to this one from, is this Barron's, Tucker?
I believe it was, yes.
Okay. Worried about the economy, America's small businesses are reducing investment in hiring, survey shows. So what we are seeing, and again, this is the question, is does this continue or does the change in the tariff framework adjust how businesses operate? What we are seeing is a clear slowdown in how businesses are indicating they're going to be hiring in the future. How that translates into actual hiring is still the question that's out there. But this is happening against a backdrop of a labor market that's been slowing significantly over the last couple of years. So I think this is the big question because I see a bunch of people trying to, kind of reference back to, 2023 and even parts of 24. And this is a fundamentally different economy than it was at the start of 2023 when people started to get recessionary fears the first time. Remember, Silicon Valley Bank blew up, and then later that summer, we started to see a slowdown in hiring, and people are like, oh, is there like a problem? Is there a recession that's going to develop out of this? And ultimately, like the view that we talked about was no, like there's enough momentum and there's enough stuff going on in the economy to be able to carry through that. I think the question here is, hey, is there enough to offset, potential tariff damage and an already slowing labor market? We don't know. And so I think we're going to have to see what develops over the next 3 to 6 months. I'm very much at this point kind of open to a possibility where the economy starts to rebound after maybe a little bit of a slowdown here and starts to rip again heading into 2026. There's also a case where it can't overcome, just the way that sentiment has been, hurt in the last month or so. And businesses then see, a slowing of new orders that continues. And so they start to, pull back on their hiring and things like that. So I think right now you just have to be open to a wide range of outcomes and understand that no one knows exactly what the broad economy looks like right now or exactly how it's going to develop for the next 3 to 6 months.
What I'm most eager to try and get a sense of is how does consumer sentiment and business sentiment translate to actual economic data potentially slowing down? Because all the things that we've been reading, Chuck, over the last 4 or 6 weeks is negative sentiment and less focus and sort of a paralysis on investing more and hiring more. But I can't quote you a single hard economic data report, GDP or anything else that's backward looking to point to that evidence.
No, it's the question is the question has been, is the hard data going to show what the soft data has been telling us?
Yeah.
And now the question is, well, will the soft data rebound, and then will the hard data follow the soft data? it's a little messy.
Who's on first?
But we'll get there. Quick break here. Wall Street Watch and Ask Todd are next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I mean, I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are extending their gains one day after the S&P 500 turned positive for the year. After months of volatility due to ongoing trade concerns, right now the Dow is up by 0.2% or 94 points. S&P 500 edging 4 points higher, and the Nasdaq up by 0.4% or 75 points. Russell 2000 actually down by 0.6%. 10-year Treasury yield flat at 4.49%, and crude oil down just over 0.33% lower, trading at $63.43 a barrel. After its 18% plunge yesterday, shares in United Health are modestly rebounding 2.5% today. Yesterday's decline was as a result of Chief Executive Andrew Witte stepping down, where Chairman Stephen Hemsley returned as the company's CEO. United Health also had a poor earnings miss and suspended its 2025 outlook. Meanwhile, after rallying 16% yesterday, Supermicro Computer shares up another 14% today. Raymond James analysts also gave the server maker's stock an outperform rating. Sticking with the tech sector, with both NVIDIA and AMD announced deals with Saudi company Humane to work on developing AI models and building data center infrastructure. Bank of America lifted its price targets of both stocks following the announcement. NVIDIA up by 2%, while AMD is actually up by 6%. AMD also announcing $6 billion in share buybacks. Elsewhere, PVH up by 8% after the parent company to Tommy Hilfiger and Calvin Klein was upgraded to buy from hold by Jefferies as the company undergoes a business transformation. JD.com down by 3% despite the Chinese e-commerce platform posting better than expected earnings and revenue, citing improving consumer sentiment. And after today's closing bell, we'll see earnings from Cisco Systems. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
As promised, we are now joined by Todd Lutzke from the law firm of Cushing & Dolan. Segment is Ask Todd. We got the phone lines open because you get to ask Todd your estate planning questions live on air right now. Phone number is 888-205-2263. A reminder, we only get to maybe 2 or 3 calls each time, and so that gives you a pretty strong incentive to call early to make sure we get to answer your question. Again, 888-205-2263 is the number to ask Todd Lutzke your estate planning questions live on air right now. That number again is 888-205-2263. Mr. Lutzke, how are you doing today?
I am never better. You?
Got a little bit annoyed earlier this morning.
Yeah, I'm always afraid to ask you this question.
My phone keeps calling me Shirley for some reason.
Really?
Well, I realized, though, that I left it in airplane mode.
Okay.
Yeah. Yeah. Todd, I want to talk to you a little bit about trusts. And specifically, so you go to an estate planning attorney, and you pay them a bunch of money to go do some legal work for you. Trusts, wills, the whole bit.
Yeah, got it.
How does one know if their trust is actually funded with assets or if you just paid a bunch of money for an expensive piece of paper?
And you know, I think the way you phrase that is accurate, because if you don't fund the trust, arguably it's not really doing anything for you. And that's important. That's when Chuck says it's an expensive piece of paper. It could be. So a couple of things. One, if we're talking about a revocable trust, and then I'll tell you a little bit about an irrevocable trust and the differences by having them not funded. But the funding to determine whether either is funded is really the same. I would say take a look at your brokerage statement, not your IRA statement from the broker, but your non-IRA, non-retirement qualified money brokerage statement. Take a look at perhaps if it's a revocable trust, even your bank statements, and see if the name on the statement is your name or your name and your wife's name alone, or if it's perhaps, if it's revocable, your name trustee of the trust. So if it shows up as trustee of the trust, then you know that everything in that account is in the trust. If it shows up in your name, then everything in that account is not in your trust, and it is avoiding the trust, probably because it's jointly owned, and would just pass to the survivor on the first death. Same idea with irrevocable trusts. See if the trust name's on there. Real estate's another big issue. Real estate needs to be put in the trust. Vacation homes and primary residence and the like. So with a vacation home or your primary residence, make sure that the tax bill, the real estate tax bill, comes in the name of the trust and not in your name personally. Remember, just because you see the name of the trustee there doesn't mean that's who owns it, because when we talk about an irrevocable trust, you might see not your name on the real estate tax bill, but maybe a child's name, trustee of the trust. And so I get calls all the time saying, oh, we didn't give the house to our daughter. No, you didn't. It's trustee. So, but people see the name and they think that that person owns it. No, the trust owns it.
Talking with Todd Lutzke from the law firm of Cushing and Dolan. If you've got a question that you want to ask Todd about your estate plan, this is the chance to do so. 888-205-2263 is the phone number. Still got a little bit of room on the phone line, so this is your chance to speak with Todd. Again, 888-205-2263 is the number to call to ask Todd your estate planning questions. Again, that number is 888-205-2263. We're going to take a quick break now, but when we come back, we're going to get to your questions with Todd Lutzke. Again, that phone number is 888-205-2263.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
All right, we got you all queued up here with Todd. Let's get right to your calls. First up, we got Philip on the Cape. Philip, what's your question for Todd Lutzke?
Yes, my question is, Todd did a irrevocable trust for me coming up on 7 years ago. Do I have to redo it again? In how many years?
So, great question. It's always a good idea to follow up and figure out after every 5, 6, 7 years you call in to check in. I mean, if your estate hasn't grown significantly and you I don't know what your total net worth is, but did we do one just for you? Are you married? I just can't recall.
No, for both myself and my wife. And yes, we have several properties involved in it and that type of thing.
Good. And would the total value of your estate be over $4 million?
I'm going to say no, but you never know at today's prices.
And are the trusts irrevocable or revocable?
Irrevocable.
So, if you're somewhere around that $4 million mark, let's say, and we've got the assets funded, as Chuck was asking earlier, they're already in the trust. I'm saying, and they're irrevocable, and you've gotten past the 5-year rule. No, there's been no law change that should affect you. You should not need to change your estate plan. I think based on those factors, your estate plan's still doing what we want it to do. It's avoiding probate, it's sheltering estate taxes, and it's protecting assets from the nursing home. The only thing that might change is if you've decided that you want to leave your assets to your family differently than the way we put it in there. Short of that, if that's the same, I think you're in pretty good shape. So great call, Phil, and I think a lot of people should take note from Philip's call, because it's a good idea to check in with your estate planning lawyer, every 5 years, or depending on how big your plan is. Larger estates check in more frequently. But the point on that is that that's exactly what our guide is that we're giving away this month, is avoiding potholes. And some of them is, hey, I got divorced. I'm changing residency. I've got a second marriage situation. These are things that make you say, hey, I better check into my estate plan. It's been 5 years. It's been 10 years. And maybe I want to check in. These are some potholes. And for folks that haven't done their planning, maybe they say, I don't need it. I'm going to rely on my will, or I'm going to rely on a nominee realty trust. These are not, I don't need to do planning because I'm not worth enough, or I'm single. No, folks, there's all kinds of potholes that you can run into. So if you haven't done your estate plan,
get the guide before you do it so you can learn what not to do. And if you've done your plan, it might give you some ideas about how you might want to change it or what you might need to do to tweak it. So it's a guide for everyone. 866-848-5699 or legalexchangeshow.com. Estate planning potholes to avoid. 866-848-5699 or legalexchangeshow.com. Next up, we got Jen in Worcester. Jen, you are on with Todd Lutzke. Jen, are you there?
This is Ken.
Ken, you're on with Todd Lutzke.
Okay, great. You know, I've heard you say many times the advantage of putting your assets in a trust is to avoid probate.
Uh-huh.
I'm just wondering, if a will does go to probate and it's open to public inspection,
Uh-huh.
can you just show up at the city clerk at City Hall and say, I want to see John Smith's will, or do you have to show cars and fill out a form, or how would that work?
No, you're absolutely right. You could just show up at the probate court and say, I'd like to pull this file and take a look at it. It is public record. So there is all the more reasons in the world that you want to avoid probate. We've mentioned many of them over the years. Privacy, of course, is one of them. If you don't want your neighbor swinging by to see what you own, because if it's in probate, there's lots of, you got to file an inventory. And so not only do you put the will there, but you have to list all of your assets and how much they're worth when you pass. So there's a lot of information there. So avoiding probate is a big reason, not the only reason, to do a trust of some kind, revocable or irrevocable, but certainly putting assets in the trust will be avoiding probate, so you don't have to have that privacy problem. So, great question, Ken. Let's go over to Bob in Paxton. Bob, what is your question for Todd Lutzke?
Hello, Todd. Thank you for taking my call.
Sure.
My question is this. My wife and I approximately have approximately $1.9 million in a 401k,
Mm-hmm.
and we own our own home. We do have a will, but should we get a trust? And if so, which kind do you recommend?
How old are you and your wife?
68.
And how much is the house worth?
$600.
And are there other investments outside of a 401k?
No, sir.
So you're looking at, about 2.5 in value. So some of the things we look at when we determine a question like this is basically, Todd, what kind of estate plan, what would be right for me? Well, I look at 68, I look at, 2.5 in assets, and I suggest that, we want to make sure we have no death tax, so we need a trust to double your exemption to $4 million. That trust could be revocable, certainly. And then the other question is, do we want to protect from the nursing home? Well, the only item we can protect from the nursing home currently is the house, which is fine, but it's also somewhat protected for each other with no planning. So we would have to get together and really iron out whether we do the irrevocable trust to try to protect assets from the nursing home or whether we just do a revocable trust. But certainly one of those trusts is going to be right for you, but the type of assets you have would require a further discussion, one that we can't do on the radio. But you're absolutely right. Estate planning at 68 is perfect timing. Again, I didn't ask, but assuming he has children, another reason to do the plan. So you're right on point there, Bob. I think planning would be right for you. We just don't know exactly which trust yet. Todd, we got one more for you. We're going to try to go 4 for 4 here. Gene in Maine is on the line. Gene, we've only got a couple minutes, so you got to be quick. But what's your question for Todd?
Well, I was going to ask you about a trust, and your previous question answered half of what I wanted to know.
Okay.
I have about $2 million in net, and it's all kinds of diversified in mutual funds, COD, CDs, land, home. I want to put a trust a reversible trust, but I want to have my 2 adult children on it also. Is that possible?
So the type of trust you said reversible. I don't know if you meant revocable or irrevocable. Which one did you mean?
Well, I was asking you the question as to I don't have one, and I need to set one up.
So how old are you?
I'm 81 years old, and my wife is 71.
So, yes, I would say with $2 million in assets, the type of planning would be just make sure we don't pay any death taxes. You're right on the bubble, and as a married couple, we certainly, with a trust, could double that exemption to $4 million, so you won't owe any estate taxes. So that's an easy fix. We can help you avoid probate when you pass away. That'll be an easy fix by funding the trust. Your age would then trigger me to say, assuming the $2 million that you're worth includes, as you said, a home. It includes, let's say, investment accounts that are not retirement, not qualified plan accounts. So just for fun, I'll say, $1 million home, $500,000 of investments, and $500,000 of retirement accounts. If the breakdown is like that, I would say, do you want to protect assets from the nursing home? And if the answer to that is yes, then we would sit down and we would explore how an irrevocable trust would work. And yes, you could put both your children on as trustee of that irrevocable trust. We would put the assets in to get them protected from the nursing home, avoid taxes, and avoid probate. And you can retain the control over removing and replacing those kids as trustees. And certainly upon your passing, you would have the kids listed as beneficiaries. I assume that's what you meant when you said put them on. So you're on the right track. I think you just need to, get in front of the lawyer and learn how to do all these things. But yes, planning is certainly right for you folks.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still a bunch to come as we head towards the second hour of the show. We'll talk a little bit about the Fed and where they go from here in the aftermath of the new reduced tariffs on China. Also, going to be talking a little bit about what's going on in AI world. And, well, I think we really have to cover this story from this story about just a brand that refuses to die. To be fair, it was attempted to be killed off far too early. But we'll talk a little bit about what's going on with a key brand name in the media space when we return.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit GoRedForWomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless status of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Trusts in Your Financial Plan. Mike, a lot of times when we talk about financial planning, it's with the idea of having your money available to you to use when you need to use it. How did trusts work to kind of keep that idea going, not just for yourself, but also for the next generation as well?
Sure, and it doesn't always need to be the next generation, because how many times have you heard somebody say, hey, look, I raised my kids, they're in a good spot, I want the less check I write to bounce. I'm spending this money. But, there can be situations where trust can benefit even a married couple in the event of a lawsuit or a nursing home that's unexpected, especially if there's a big age gap. That can be critical. But for next generation planning, it gets much more common, and especially in the New England area where most states have an estate tax, there's a lot that can be done from a multi-generational planning perspective to, if not eliminate those taxes, at least mitigate them to a large degree. I mean, you think about here in New England, the value of your primary residence, which you sell, it might not be subject to capital gains tax, but if you die, is most certainly subject to estate taxes. There's a lot that can be done in the way of trust planning.
Our guide this month is titled Trusts in Your Financial Plan, and you can request it by calling 800-393-4001. Again, that number is 800-393-4001, and the guide this month is titled Trusts in Your Financial Plan and details a number of ideas about how you can fit trusts into your financial plan.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, Tucker with you, kicking off hour 2 of the Financial Exchange. Markets are pretty quiet overall, kind of mixed. The Dow is off about 120 points. The S&P is down 10. NASDAQ up 24, though, so strength continuing in tech stocks in particular. I mean, look, most of it right now concentrated in NVIDIA and AMD on the back of optimism surrounding a deal they have made with Saudi Arabia to supply a bunch of chips there. And so you've got, again, mixed markets today. Overall, more stocks selling off than in positive territory on a net basis. 335 more stocks down today in the S&P 500 than up. But when the stocks that are up are NVIDIA, AMD, Google, and Tesla, that can offset, a whole lot of weakness that's happening elsewhere. And that's kind of the story of what we saw in 2023 and the first half of 24. So this is a day that looks reminiscent of kind of that 18-month period that was really good for equity markets, but not great for the average stock. So we'll have to see where things go as today develops in equity markets. On the bond side of things, yields continuing to move upward a little bit. The 10-year is now at 4.505%. Also yesterday, mortgage rates holding steady overall at 6.92% on the Mortgage News Daily 30-year fixed-rate national average. So still kind of hanging out right in that 6.9 range. No clear, break in either direction there at the moment. We've got in energy, oil prices moving down just a tick here, down 27 cents a barrel to 63.40 right now. So you've got a little bit of a dip after those rose about 10% in the last week after the China deal, started to percolate through. And we've got gold down 61.10 an ounce, about 2% to 31.86 and 70 cents. Top story this hour from Bill Dudley, who is the former president of the Federal Reserve Bank of New York. And it's titled, "The China Trade Deal Doesn't Solve the Fed's Problems." And it kind of lays out the idea that there are still a number of things that the Fed is trying to get a handle on. And so most likely the Fed is going to remain paused for an extended period of time here just because the data is going to be pointing in all different directions. And it still is unclear exactly where policy is going to be at the end of the year. So let's start first with the data. There's a realistic world, Paul, where over the next couple months, retail sales data goes in the toilet because people pre-bought a bunch of cars before tariffs and, we're buying this and that and everything. And now they say, great, we don't need to buy any of that stuff anymore. And so you say, okay, retail sales data is weakening. Does that mean that the U.S. economy is struggling? Maybe. But also, maybe people feel a little bit better about their situation now that the stock market's recovered, and so maybe they start taking trips again, and so airfares go back up. And so the CPI, you'd say, okay, airfares have been down the last couple months in CPI. That's been a big help. But auto tariffs are still in place, and so, you've got auto insurance rates that are starting to move up again, and so inflation starts moving up as retail sales are moving down. And the jobs market just kind of chops around. The point I'm getting at is I don't know that the data is going to show any coherent picture over the next few months. You can have parts of the economy that look like they are in deep doo-doo. You can have parts of the economy that look like they're surging. Overall, in the aggregate, you might just say, hey, economic growth ends up coming in 1.5% to 2%, and there's no recession, but you're not really sure what's going to come next. And if that's the case, the Fed might just sit there and say, yeah, we don't know what this means. We're gonna wait for more clarity before we do anything.
That's exactly what we were talking about in the first hour. It's just there are so many variables that we need time to see how they're going to play out. So getting the clarity on inflation, getting a good understanding of where the economic growth lies and where the labor market is, as well as the conclusion of the 90-day pause for those reciprocal tariffs on the policy front, those three factors all need to be sorted out over a period of time. And when you look at the CME futures market, which tries to assess the probability that the Fed would take any sort of action, it very conclusively says from a percentage standpoint or a probability standpoint that, just as mentioned in this piece, the idea of rate cuts really, for the moment, isn't on the table until mid-September. We're really not going to see any type of action until then. So we'll continue to parse through news stories and different pieces of economic data that may lead us in one direction or another, but I think it's important to keep a little bit of that more intermediate term in mind when looking at the economy for the next 6 months or so, 4 or 5 months or so.
So I think that when we look at the Fed, the other thing that's going to complicate this, there's a decent chance that 2 months from now we get to July 9th. July 9th is the, I don't know if it's the 9th, actually. It might end up being the 7th just because it's the 90-day window from the original tariff pause on April 9th. So we get to July 9th. Paul, do you know what's going to happen on July 9th?
Absolutely not.
I have no idea what's going to happen then. I could see a reasonable path where the Trump administration says, hey, we're continuing to have good conversations. As such, we are pausing reciprocal tariffs for an additional 90 or 180 days. The 10% baseline stays in effect. I could see a reasonable case where they say that exact thing, but say, except there are a couple countries where we're not having great conversations, and so their reciprocal tariffs are going into effect. Which countries? I have no idea. I could see a reasonable world in which they say, after much negotiation, we haven't been able to get anywhere. We need to put these back in place because we're not having productive enough conversations. I could see a world where they say, you know what? These have been great. We're going to reduce the baseline tariff rate from 10 to 5. I'm not saying any of this is likely or that I can price it in any way, shape, or form. But all the things I just said are very much possible, especially after what we saw last weekend, which came in much better than anyone was expecting as far as the effective tariff rate that is now applied to Chinese imports.
Definitely.
So you go out 2 months from now, we don't know what that policy is going to be, and this gets at something that I think is really interesting. So there's a guy that I follow on social media His name is Molson Hart, and he runs a company called Viahart, and they make all kinds of different consumer products like kids' toys and stuff like the stuff that you would import from China, because that's the cheap place to make it, and it's, again, like cheap plastic toys, and there's only one place that you can get the cheapest, for that, and that is China. And so here's what's interesting. On May 8th, and this is on X, and again, these are polls that are, you can't verify the results of them, but again, you figure the people that follow someone like this are probably, a representative sample of whatever. He said, what have you done with your orders from China since Liberation Day? And what he showed at that point was that 55% of respondents, when tariffs were still at 145%, said they had paused all shipments from China. 21% said they had paused approximately half of their shipments. And 24% said that they had made no change at all. But 75% of respondents had said we either paused all or around half of our shipments from China. So yesterday, he goes and asks, hey, what do you think? The question he asks, I'll phrase it how he did. Now that tariffs are 30%, what are you doing with your China shipments? And the responses, again, like when you look at the subset that actually answered, because one of the poll options is just show me the results, 50% said they're now buying as much as they can. So, okay, great, like back the truck up, like let's do this again.
Yep.
About 20% said we're buying half as much as what we want. Now, that could be because they don't have the cash flow to buy more. It could be because maybe they think tariffs are going to go lower. You don't know. About 15% said we're still not buying anything.
Okay.
That could be because, hey, we already bought enough and we don't need to right now. It could be because they don't have the cash flow. Who knows, this and that. But we have no idea like the size and scale and the magnitude of this. The 50% that says they're buying as much as they can, those could all be $1,000 orders, just as an example. The percentage that says, hey, we're buying half as much as what we want, they could be $1 million orders. Like, we don't know, like, the scale of any of this. And this gets at the problem that the Fed's going to have, which is no one knows what any of this is going to look like as trade between those two countries restarts. And so it's going to be really messy. And if you don't know what to do, usually the best thing to do is to do nothing and not try to overthink it.
Yep.
Let's take a quick break. When we come back, we will do a little bit of trivia, and then we're talking salt after this.
Tariff fever is in high gear. We've got the latest on what might be next and how long it might last. Only here on the Financial Exchange Radio Network. Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com. There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-390 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and you can register right now for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston. Time for trivia here on the Financial Exchange, and on this day in 2013, Dan Brown released his fourth book starring Robert Langdon, Inferno. Dan Brown's most successful book starring Langdon was 2003's The Da Vinci Code. Trivia question today: which actor portrayed Robert Langdon in The Da Vinci Code? Once again, which actor portrayed Robert Langdon in The Da Vinci Code? Be the eighth person today to text us at 617-362-1385 with the correct answer, and you win a brand new Financial Exchange Show t-shirt. Once again, the eighth correct response to text us at 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Let's talk a little bit about salt. You big fan of salt, Paul, or are you more of a pepper guy?
Pepper.
You all about, Tucker, what about you, salt or pepper?
Flake salt.
Oh, yeah.
Finishing salt.
Yeah, I can respect that. So the salt that we're actually talking about is the state and local tax deduction, which currently stands at a $10,000 cap. So if you have state and local taxes that are north of $10,000, you cannot deduct them on your taxes. That's part of the 2017 tax bill that the first Trump administration passed. So you've got the House Ways and Means Committee that is trying to figure out what to do with this. because Republicans have a very narrow majority in the House of Representatives, and you have a handful, I believe it's 5 reps from New York and New Jersey that are sitting there saying, look, we need to bring something back to people in our districts because otherwise they're going to give us the boot. And by the way, we might have, eyes on higher office. And, if we want to say that we delivered something to our state, like, hey, we need to, bring something to them. And so the House Ways and Means Committee has a proposal that they put out that would raise the SALT cap from $10,000 to $30,000, and it would phase out for individuals making north of $200,000 and for married couples making more than $400,000. Mm-hmm. You then have this group of holdouts. What do we call them? Can we like name them? It probably won't matter if they come to an agreement today, but they thought they were going to have something yesterday, and they don't yet. So obviously, with Congress only actually in session for a handful of days each year, each one kind of counts. So I think that, what we call them may or may not matter. But the initial ask that I saw from this group was for like a $64,000 carve out for individuals and like $128,000 for married couples. It was in that ballpark. I don't know the exact number because I don't have it in front of me, but it was significantly different, which obviously you sit there and you say, okay, the obvious middle ground is make it, a $50,000 deduction that phases, or, a $40,000 deduction that phases out after, $600,000 in income or something like that. Like it shouldn't be that hard to bridge this. The interesting thing is that they've been going at it on this specific piece for 2 days now and haven't gotten there yet. And you can't pass this legislation without those holdouts getting there. This is all something that I say simply to indicate why I do not pay too much attention to exactly what people are talking about with, any congressional bill before it gets to the point where they're going to sign it, is because it always goes through all of these things, and they're going to have to figure out some kind of compromise on this in order to get it done. The other piece that I do think I'm starting to pay attention to, now that we are getting, more details in general, there are more and more things that are being thrown into this that are tax breaks. You've got this, you've got no tax on tips. The way that they are trying to pass the no tax on Social Security is through further complication of the tax code, through a increase in the standard deduction if you are of Social Security age.
Right.
You have the tax deductibility of American-made cars, the interest payments on those.
Right.
So, like, you got a lot that's being crammed in here, and all I can say is there's going to have to be a lot of heavy lifting done in order to make this work with the deficit. Otherwise, all we end up doing is saying, okay, no one's serious about the deficit again.
It feels that way looking at these numbers.
Kind of where it looks like we're heading.
Even in the summary of this particular piece, they're stating that the bill so far adds only $3.8 trillion in deficits, less than the $4.5 trillion limit lawmakers have given themselves. So already built in a pretty significant increase to the deficit, which you'd like from a long-term policy perspective to be taken a little bit more seriously.
Yes, you can't continue to run 6% deficits without a recession, because what that means, based on how automatic stabilizers such as unemployment insurance kick in once you have a recession, a 6% deficit in a baseline scenario with unemployment at 4.2% means that your deficit goes to like 9 to 10% of GDP for the year if you have a recession. And to quote the late, great, Charlie Munger, who can buy them bonds?
And if the interest rates have to rise on them when you have $36 trillion of debt on the balance sheet, also
which means that you have to issue more bonds, which means who can buy them bonds?
Right.
So I think that, again, we're kind of touching the stove here a little bit, and I don't like to touch the stove because, hint, hint, it's hot. and you don't need to touch it in order to realize that it's hot. So, and by the way, like just as an example of this, now that we are, through the, prime focus being on tariffs and trade, it's still like a secondary thing because like there still is something there. But the 10-year Treasury over the last week now, a week ago on May 7th, 10-year Treasury was at 4.26%. That's the low it hit for the day. It's at 4.5 now. It's up 0.25% over the last week. That's not telling you anything good about how this is being interpreted. Now, look, you can say there's a million other things that are playing in. Like, yeah, I understand that. There's never any one thing that you can look at. But I do worry about the deficit piece becoming a focus in the coming months here. Let's take a quick break. When we return, we've got the trivia answer after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? It's not, simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Today's trivia question was, which actor portrayed Robert Langdon in the Da Vinci Code back in, 2003? Somewhere in that range? That would be Tom Hanks. Tom Hanks portrayed Robert Langdon. Ashley from Atkinson, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Piece in the Bloomberg today, Bloomberg opinion. It's titled, Buying the Dip Still Works, Even in This New World. The subheader is The Power of Individual Investors on Display. I'll quote from the first paragraph. Retail investors have won again. When trade tensions flared in early April and about $6.6 trillion in market value vanished from U.S. stocks in just 2 business days, the 5th worst 2-day drop since the S&P 500's creation in 1957, they didn't panic. Instead, they have learned to do over the past 15 years. They bought the dip. 6 weeks later, the U.S. stock benchmark has not only recovered but surpassed its pre-tariff levels, delivering a gain of about 17% from the lows to those who kept their nerve. So, a couple things on this that I find interesting or that I think are worth noting. The first is, retail investors absolutely crushed it for the last 30 days. Absolutely nailed it. They did fantastic. The questions that are out there are referenced by a couple of different items in here. The first is this sentence, instead they did what they've learned to do over the past 15 years. And that time frame is really important because there are significant periods of time in U.S. investing history where if you bought the dip on a 10 or 15 or 20% dip, it was not a great move for you. Specifically, look at the tech bubble. Like, that's the most recent one. You can also pretty much look at like 1971 through 1982. Horrible time for dip buyers. Now, this is not to say that this is either of those times, but it is to say this is, something that may or may not end up working. The second piece here that's in reference to that is, hey, do you win the month and end up losing the year? Maybe. Like, you don't... It's never done. I like to tell there's a... I don't have the exact reference for where it's from, but there's one of my favorite, you call it a fable or a story, whatever you want. One of my favorite stories from somewhere in Southeast Asia is there's a guy who just lives on a horse farm with his kid. And one day his horse runs away, and all of the people in his village are like, "Oh, that's just so bad. I'm so sorry for you." And he says, whatever, maybe it'll be okay. And the next day, the horse comes back and brings 5 other horses with it. And everyone's like, oh, this is so great. We're so happy for you. This is wonderful news. And he goes, yeah, maybe. And the next day, his son gets on one of the new horses, tries to ride it. And the new horse, because it's a wild horse, throws the son off and the son breaks his leg. And all of his friends go, oh, this is such horrible news. And he goes, well, maybe. And the day after that, there's a huge war that breaks out, and all of the able-bodied young men go out to war. and his son can't because he's got a broken leg, and all the neighbors say, oh, like, what a great thing. And he says, maybe. And my point in saying this is, look, you never know how any of this is going to end. We said this, all through April when markets were, chopping around and there was a ton of downward volatility. The thing we were saying all during that time is, like, you don't know exactly how this is going to end. And we don't know where we're going to be a couple months from now. So, yes, if all of those dip buyers bought the dip and have liquidated today, they won.
Mm-hmm.
If they bought the dip and markets run higher from here and they continue holding on, they won. If they bought the dip and then markets start to roll over and then they try to buy it again and get heavier, and then, like, you don't know how all of this is going to play out in the long term. And so my point is, when you're actually investing for the long term, trying to win every day or month is not going to be something that's realistic or feasible. And you need to kind of look at those broader trends and what you're actually trying to do with your money, as opposed to becoming, a trader, because a trader and an investor are two different things, Paul.
Yeah, it was interesting, the data here specific to the amount of retail investor activity during that span of time, Chuck, where we saw, if you're looking at data from Charles Schwab, they saw that for their 37 million brokerage accounts over the span of April, they saw 10 million trades done per day the first 2 weeks of April. That was up 36% from a year earlier. And they also saw 2 to 3 times the level of new accounts being opened in the month of April. Separately, JP Morgan reported a net purchase of $40 billion of stock in the month of April there too. So something that I was not privy to during that time, that retail investors were extremely active over the period of April, and have picked up activity levels to really what we haven't seen since really 2021, where the meme stock frenzy took over and there was a tremendous amount of retail investor activity, but a significant uptick for the month of April, it appears, as well.
So if you've gone through the last month or so and you've been like, hey, I don't really know what to do and I feel like I'm making bad decisions, look, it's always worth talking to someone about a second opinion, simply because this is something, I say this a lot. Look, you spend 2,000 hours a year during your working life working. You do that over 30, 40 years, you're talking 60,000, 80,000 hours. And if your savings from that, if you're not comfortable doing it yourself, or you don't have the time to do it yourself, hey, finding someone that you can trust that can help you to figure out what to do as far as investments and retirement planning and answering those other questions, it's a big thing for you. So you can call the Armstrong Advisory Group at 800-393-4001 to set up a time to meet with one of our advisors. We've got offices all throughout the New England region. That number again is 800-393-4001. Again, you're going to, over the course of your career, spend 60 to 80,000 hours working. Make sure that you're actually, taking care of the money you earn during those hours by figuring out, hey, how do I make it work for me in order to buy a house, a car, send my kid to college, save for retirement? Those are questions that we help answer. Again, the phone number for Armstrong Advisory Group, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I got to talk about, we got to talk about Warner Brothers Discovery, because you guys are familiar now with Max, their streaming service.
Yes.
So that's what, 2 years ago, they decided, hey, we're going to get rid of the HBO name that used to be attached to our streaming service. It used to be called HBO Max. We're going to get rid of the most powerful name in legacy media, in HBO, and just rebrand the place Max. I mean, HBO, the channel that's associated, the brand that's associated with The Sopranos, Game of Thrones, Band of Brothers, The Wire. I mean, I can go, you look at every list of premium TV that's out there and the best shows ever made, half of them are HBO shows. And Warner Brothers Discovery, after all the manipulations that ended up with them owning this and a bunch of other streaming stuff, they said, no, we're going to get rid of that name 2 years ago. We're just going to call it Max. And we made fun of them for that. We said that was dumb. We said, how could you possibly, try to kill off the most valuable legacy media name out there? Well, 2 years later, guess what, folks? They're bringing it back.
Snip, snap, snip, snap.
They're bringing it back. Announcing today, Warner Brothers Discovery is going to be renaming their streaming platform HBO Max. Quote, the powerful growth we've seen in our global streaming service is built around the quality of our programming. Today, we are bringing back HBO, the brand that represents the highest quality in media. Oh, you think? To further accelerate that growth in the years ahead.
What a strange journey it's been.
Can you just imagine being a fly on the wall during all of these meetings over the past 2 years? Let's drop the HBO and just call it Max 2 years later. Well, let's put back the HBO so it can go back to being HBO Max. Just dummies. Dummies.
How much time, effort, and money have they spent on something that, quite honestly, anyone who knows anything about brand equity and branding would have told you, hey, this is a bad idea. I give them an ounce of credit for realizing after 2 years, hey, we made a horrible mistake.
Yeah.
But
our bad.
Who were the people to begin with that said this was a good idea?
That's what I was trying
to point.
Determine. Does AT&T have any hand in this? Because
No.
They had Warner Brothers Discovery before.
This was after the spinoff.
Okay, got it.
This was after. And so HBO Max, while they were under AT&T in 2019, that's when this was created. And then as Warner Brothers Discovery got spun out and everything, they decided to rebrand it because...
Got it. After that change. Okay.
It was we got to do something.
Gotta start fresh.
We're our own company now. We got to do something here. And lo and behold, they did the wrong something when the best thing to do would be nothing. So,
it does seem like it's, regardless of the name fiasco, it's been turned around pretty well. Its profitability has increased by about $3 billion, according to the CNBC piece, for the last 2 years, and they've got about 22 million subscribers added in the past year. They're trying for 150 million by the end of 2026.
I'm going to go a step further on this.
You think within
the next 2 years, they're going to get rid of the Max.
HBO.
And it's just going to be HBO.
Yeah. What's this Max doing here? We don't need the Max.
Get rid of the Max.
It's kind of like how ESPN just announced their new streaming app coming out in the
ESPN.
fall. ESPN. Not ESPN Plus.
This is what I'm saying.
Just
ESPN. This is where the zeitgeist is going now. For the last few years, it's been Disney Plus, HBO Max, Walmart Plus, OPEC Plus. Everyone's adding the plus. Netflix needs to come out with a Netflix minus.
With all the ads. Their ads.
Netflix multiplication. It's just ridiculous at this point. So, yeah, HBO Max is coming back, which means they got to pay a bunch of money to rebrand all the stuff and relabel it and, re-watermark all the films and this and that. It's just ridiculous. How much money did they spend just doing this? My goodness. Let's take a quick break. When we come back, we got Stack Roulette after this.
Tariffs fears continue to grip markets. Get the latest straight from Wall Street right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visitusvi.com.
Paul, what do you got for me?
Piece here from the Boston Globe, Chuck. If so many people are leaving the state of Massachusetts, why aren't housing costs going down? Piece from the Globe this morning here, where interesting piece where it details that we have seen domestically U.S. citizens who are Massachusetts residents leave the state in pretty significant numbers over the last several years. We saw 55,000 people leave in 2022. In 2023, another 36,000 depart, and then 27,000 in 2024. Again, some of that was offset by we had people from other countries moving into the state of Massachusetts, but just looking at U.S. residents where they were living, we saw a lot of people move out of Massachusetts. And one of the things that happened was obviously the state millionaires tax was implemented during that period of time. Some rumors out there that perhaps that would drive people to leave, but we still find ourselves with a significant housing shortage, where Maura Healey has set out a goal to build 222,000 new homes over the next decade to try and fix the housing shortage that Massachusetts finds itself in, where nationally you've seen actually a slight decline on single-family home prices, but in Massachusetts we saw an 11% increase on single-family homes. And just interesting data that we see here. Certainly on the building front, we're nowhere near reaching that target of 222,000. There was about 13,000 of permits in 2023. We're just nowhere near the pace. Massachusetts, still in the greater Boston area, has the lowest rental vacancy of all the major cities. It just continues to be an issue, and I'm not here to sit and say that I have a fix for it, but it is just fascinating how significant of a shortage there is. And the other thing that's mentioned in this piece is this idea that there are a lot of new households being formed, millennials sort of transitioning from living with their parents to developing their own family.
Not even
unit.
Millennials anymore. Some of the Gen
Zers
Zers
are stepping up to the plate also. And you have a significant part of the baby boomer generation, which are going to be theoretically occupying these suburban homes where the bedrooms won't be entirely filled, but they won't necessarily be moving out of those houses, which just creates potentially a further shortage on the housing front.
I think Massachusetts can best be summed up by former Yankees great Yogi Berra. Nobody goes there anymore. It's too crowded.
Yeah.
You know, that's kind of what it feels like.
Yep.
But one thing, and this Boston Globe piece does make a good point on this. You know, people will say, well, look, like if people move out, then it won't be as crowded and, you know, the price of housing will go down.
Right.
The problem that you run into is we've yet to really see any economy in the world succeed with a dwindling population, because if you are losing population, especially if younger people are moving out, you are losing future workers. And talk to anyone who has, even within Massachusetts, like talk to some of the mill towns that were hollowed out over the last 50, 60 years and what you've seen there and how those communities have had to rebuild and kind of reinvent themselves. It's not good when you have a dwindling population, because it usually means a lot of bad things are going on. I'm not saying that we all need to have 8 kids, because any of you who've listened to the show repeatedly, you know that I don't really, think forcing people to have kids, I mean, it's basically the worst thing ever. And like it's not having kids, but like forcing people to have kids is about as dehumanizing a thing as you can do. And so ultimately, there's a healthy balance that you need to have here. The problem is we just have not built enough housing. And some of that's space related, some of that's regulation related. Some of it is we just, as much as we talk about wanting more housing, we don't actually want it in our backyard, and we got to figure out how to deal with that. And as Paul said, there's no great answers to this, but that's the deal. New York Times piece: your next Airbnb may include room service and tamale making.
Heyo.
So I'll quote here, in an announcement yesterday, Brian Chesky, Airbnb's chief executive, said the company will offer the kinds of services typically found at hotels, including room service, spa treatments, and personal training, all bookable on Airbnb's redesigned app. Other services could include professional chefs, salon treatments like hair, nails, and makeup. So they want a cut of this. So basically you agree to, be on their app and they get a cut for, the booking, I'm sure.
Professional chefs, I like that idea.
I mean, it seems to be a fairly low-risk thing for them. It doesn't seem like there's like a ton of overhead or a ton of expense. How well it works, I don't know, but I don't know, kind of interesting to me. We're going to take a quick break for the entire rest of the day. I hope you enjoy that rest of the day, and we'll have an even better show for you tomorrow, hopefully.